Hi, this is Jonathan Mickles with the Strategic Multifamily Investing Podcast, and I'm here with Chris Salerno. How you doing, Chris?
I'm doing phenomenal. It's a great day here in Charlotte. Very excited to be here. Thanks so much for having me.
My pleasure, my pleasure. So, you are a seasoned operator. You've got some stuff under your belt, and that's the reason why we reached out to you. We wanted to talk with seasoned operators and kind of hear their story, how they kind of got started, and just any additional advice that you may have. So, how did you get involved with multifamily in the first place?
Yeah, great question. And I always love when I get this question. So how I even got started in the business of multifamily, I started out in the single family space. I created a residential brokerage company that was affiliated with Keller Williams. I grew that company and I merged that company with the number one team in the Carolinas with Keller Williams. When I did the merger, the company was around 94 million in annual sales. They were stagnant for 3 years about that. And I was able to bring them to 147 million and just in about a year and a half. After doing that, I really realized that it's always a hustle and that you really don't build wealth brokering real estate. So I started studying the '08 market and I noticed that multifamily was the strongest asset class. It recovered the quickest. But I went back to a game we played when we were younger called Monopoly. And I realized you don't broker real estate in the game Monopoly. You have to own the real estate and you build wealth. And then eventually you win the game. So I very quickly, I started educating myself, listening to podcasts like yours, podcasts like ours, the Mindful Multifamily Show. And then I came across a podcast and I believe in laws of attraction. I went to a meetup locally here. And funny story, I wore a three-piece suit because I thought I was walking into a Blackstone meeting to talk about multifamily investing. And come to find out, everyone's in flip-flop shorts and a T-shirt. And I
Yep.
thought I was in the wrong spot, but I wasn't. And I met a gentleman who got coached by Joe Fairless. And I never knew Joe Fairless coached at all.
Mm.
So I was able to get on multiple phone calls with him, and I joined his private mentorship group, and I started scaling the business very quickly after that. Within 7 months, acquired a little over 40 million and 364 units. And then from there, we within 2 years, we're over 50 million and 500 units.
Wow.
Very quickly and strategically. And now this year, our goal is minimum 4 deals, 100 million assets under management. So,
Wow. So that's significant. So let's go back for everybody else who may not know who Joe Fairless is. And if you're in the multifamily space, you know who he is already.
oh yeah.
Who is Joe Fairless and why was he a mentor that you decided to pick? I mean, there's so many that are out here.
There's a ton out there. And I actually thought about creating my own program as well. I've had some people actually pay me, and I am doing one-on-one mentorship with them. And the reason why I've connected with Joe is because all these other mentorship groups, you have to go to one of their coaches. And I did not want that. I used to coach in the residential industry, and now I'm opening just like a one-on-one in the multifamily industry. But that's why I picked Joe, is that we were one-on-one. I can text them right now and they'll text me back. And that's why I love it. Is that one-on-one relationship we have together, not only in business, but in personal. I call him with some personal stuff and we talk personal life too. And that's why I wanted him, and honored to be in his group and honored to be a part of him as well. And very excited what the future holds for the both of us.
Absolutely. Well, I mean, that's just fantastic. You can actually touch and feel,
Yeah.
the person, and it's not just.
And that's why we invest in real estate. So we
Okay.
can touch and feel, and it's present, not the stock market, because you're not going to Apple's CEO and told him you bought 2 shares of his company and you want to talk to him. It's not going to happen.
I got you.
So,
But you started investing in multifamily real estate after doing some coaching with Joe. But I mean, did you have your own money? I mean, you growing the organization from 37 million, I believe, to 147 million. That's quite a feat. So I'm pretty sure you had some reserve cash, or were you kind of just starting out on your own on this, doing
yeah.
syndication? Or joint
No,
venture?
I started out on the own. And the big thing to note as well is that even though, his program is extremely helpful, it's not hand holding. And I didn't want it to be hand holding. some of these programs are hand-holding, and you should not want that. You should want something that is really all up to you, and you have to put your work ethic into it and your mindset to grow the business. So it's not all a hand-holding type of business that or program that he has. And on top of that, to answer your question, I got into it with some capital, but I dump all my capital into my company. And my employees will tell you that I don't take a profit from QC Capital. I don't want to take a profit because I'm pouring it all back into the company, and I want the company to succeed and grow. And that's what I did when we first got started. I poured all my time, effort, and capital into the company.
So then you don't get paid from any of the deals that you do right now, or if you don't,
I dump it all back into the company.
Wow. Okay. All right. So then you're operating on the shoot. So you're working at McDonald's or something? No,
God no. God.
I don't know.
I'm very good with money, or I would like to say I am, because I can do what I do and I operate, what I've operated.
Do you draw salary from the business, and then of course the profits?
I draw a very minimum salary. I'm the lowest paid person in the whole company. I'm the lowest. And even my right-hand person said, Chris, I don't feel comfortable with you getting paid that much. And I said, I don't care what you feel comfortable with. I'm getting paid that because I'm dumping everything back into it. And even though what I get paid, I'm dumping back into it. But no, I was very strategic with my capital. And I bought some little businesses on the side that cash flow very, very well.
There you go. Okay.
I live off those businesses while I have any of my profits from my real estate just keep recirculating and reinvesting and rebuilding the company while I live off these other little businesses that I own. And I did that. Now, they make good money, but it's not where, obviously not the money I would love to be making, but I'm growing that to make that much on a monthly basis. But all the money I make in QC Capital gets recirculated back into it.
Yeah. And I think what comes to mind is Tim Ferriss. Tim Ferriss mentioned,
Yep, I know him.
Hey, $75,000 a year is pretty much the strike point. Anything above that generally is considered extra. And so if you're making that, or, thereabouts.
I only make $30,000 from my company.
30,000 from his company. But again, his expenses are probably very low as well. He's got some other things. You probably own your house outright. You probably own your car outright.
I actually don't. I rent my house. I don't want to own. I don't want to own.
Okay. All right. Now, why rent your house instead of owning your house?
Because it doesn't make sense right now. Even though interest rates are low, it doesn't make sense. Because I'm not wanting to be locked down in one place. And whoever bought, and I used to sell people houses.
Exactly.
And I sat at that closing table, and I have one single family rental I can't stand. But I sat at that closing table and I looked at that document that was this big, about an inch big. And I looked at the very back on a 30-year mortgage, how much the bank made. I didn't care how much they paid out or how much I paid out when I bought a single family. I looked how much the bank made and I said, dang, they're in the best business. Holy cow.
But you're paying that interest, aren't you, in doing your renting? I mean, I'm a realtor and I'm playing devil's advocate.
I know, play that devil's advocate. Well, Jonathan, how many times will over that span of depending on where you live, taxes too, South Carolina, they're doubled, they're at 3%, so they're low. But let's go back to 2%. Let's go back to any issues that happen. Over that 1 year, what happens? Okay. How many issues do you think can happen?
Just a couple here and there. Nothing really happens, in that first
year.
So
the beautiful townhouse I live in, 3-bedroom, 2.5 bathroom, gas range. I mean, I love it. Fireplace, all that fun stuff.
Sure.
HVAC, I've already had to put in work orders for the HVAC. And it's only a 7-year-old property. Put in work orders for the HVAC. We've had some plumbing leaks. I've had to already call out. For plumbing leaks, little things like that where I don't have to pay those expenses. But if you, and there's a formula out there, like if it's like 15% more than the average rent or something, someone's told me that before. I can't recall, but it just doesn't make sense
to stay in the home for very long. I mean,
I don't plan. I right now in my life, even though I have a 13-month-old and a family, I am not wanting to be set in stone in that area.
Got it.
I don't want to be locked in, because to me, I love the condo lifestyle, and I'm trying to push to get to that lifestyle, but it's very, with a significant other, she's not wanting to. So, happy life, happy wife, they say.
There you go. There you go.
But when it comes to overall location, I don't want to be tied down right now.
I understand that. And I think that right there is the preeminent decision, in my opinion, if somebody is, thinking about buying or renting. How long do you plan to be in the area? I mean, if you don't plan to be in the area maybe a year or two because you don't know what's going to really happen, then probably renting is probably the better thing for you.
And could I buy the place I'm in? I could. Could my monthly payments be $1,200-$1,300? I could. I also do have a home office that I write off. Yeah. So it knocks it basically down to that.
Yeah.
I don't want to pay the HOA dues. God almighty. So if you add, I forgot about that. If you add the HOA dues, they're probably only making $100-$200 profit off me. I don't care. What is that? That's a couple grand a year. Well, they're close to break even because of what's happened. So
I got you. But I guess the thought is, well, you'll at least have it. If something happens, you can come back to it. But again, where you are in your life, that doesn't line up with you. But thank you for giving us that.
Sure. Oh, always.
So right now, where are your properties? You said you're at about 500 properties right now. And where are they located?
1 in Charlotte, 3 out in Greenville, South Carolina, and we're looking heavily to acquire another deal here in the Carolinas this first quarter.
Okay. And so we'll get. What are your thoughts in terms of specifications? What are you looking for?
We're looking for assets between 1990 and 2017. That's our main focus. 100 plus units. Primarily B, A Core Plus, A assets.
Now, we talked a little bit, prior to this conversation about you doing some property management, and, you pretty much do all outsourced property management. Why did you make that decision?
We made that decision because I want to grow the company with acquisitions and deals. It makes sense once you have a certain amount of units under your management, to then go ahead and bring property management in the house. It makes that, you have to do it at the right time. It's not always good to grow everything at once.
Right. So are you doing more syndication deals, or are you doing JV deals? What kinds of things are you doing right now?
Right now, more syndication deals, but we're always open to JV partnerships, and we'd be willing to do a JV partnership as well. So it just all depends. And 1, it has to be a win-win for all the partners that are involved. And then 2, it has to be a win-win for the partnership of the JV team and GP team.
And so looking at your website, you're pretty much focused on the Southeast right now, and also in Texas. Why focus on those areas? I mean, there's a lot more of the United States that's out there. A lot of people I know are going to Utah, or they're in Arkansas or in Oklahoma. What has you so bullish on the Southeast?
Well, if you look at where people moving to, it's the Carolinas, Florida, Georgia, and Texas. Those are the main states people are moving to, and it's just going to keep growing. So that's why I'm so bullish on it, is because, especially living here in Charlotte's the second biggest financial district in the United States after Manhattan. Not a lot of people know about that. The growth that Charlotte, the Carolinas, Texas, Georgia, Atlanta, and Florida markets are seeing right now it's just unbelievable. But that's because all the jobs are moving there, lower cost of living, taxes are cheap. They're getting a lot of tax incentives to get to those states. And these larger companies that are moving there are going to have jobs ready to go for more people to get employed. So that's just going to boost the housing industry. That's going to boost the rental industry. That's why we love the Carolinas and the Southeast.
So then my question becomes, where are you getting your information from that this is where people are moving? Because, census data, hopefully 2020 census will be out in March, but, the census data from 2010, et cetera, are you getting that data from there, or?
God, no, 2010's out. No, go to U-Haul.
I don't know.
Go to U-Haul. U-Haul's a huge company, and they pour out data all the time. They just poured out an article that I read on where people are moving to. It's mainly Texas right now, but where people are moving to. I'm always looking and reading of, where people are moving to, where are they migrating, what cities, what's the population. Just last year alone, 338,000 people have moved to the state of Texas. Last year, 338,000. North Carolina, I think, was 98,000. South Carolina was like 75 or 68,000. So those right there, those are great numbers, but it's good to be on top of that. So I'm always sourcing data from multiple sources and reliable sources, and especially all these moving companies. They have tremendous amount of data of where people are moving to and where are they moving from.
Now that's a gem right there, because I never thought about moving companies. Most of the times I talk with people, they talk about using Marcus and Millichap and other brokerage firms like that who put out here are the hottest cities, the hottest areas to go in. So also city data, some people use that as
I've heard of that. Yep,
another source of being able to find that kind of information.
For sure.
What was one of, say, the biggest mistakes that you had when you were starting out your business? What was one of the biggest mistakes that you wish that you hadn't had done?
Biggest mistakes, there's a lot of them, but one that I could think of is maybe jumping the gun too quickly. And does that come with an experience? Probably.
No, jumping the gun. What does that mean?
Making decisions faster than you need to.
Interesting. Okay. So
sometimes people make decisions very quickly without analyzing.
Okay.
Now I haven't done that on a deal. I have an extreme amount of patience, and we analyze deals, and it all comes down to the numbers. And if it doesn't make sense, we will not move forward with them. So I mean, with partnerships, that's what I mean is JV partnerships. Yeah. You knowing someone or thinking you know someone and getting into that partnership and realizing, it's not all meant, all cooked up like it was told to you. Their work ethic was really not what you thought it was. So now you're going to have to pull more weight on your shoulders. That's what I mean by jumping the gun and really, making a quick decision on a type of partnership, not on a deal level. We're very patient and calm, and we watch it very closely. But when it comes to a type of partnership like that, that's what I mean.
So then what's your process now for going through partnerships? And right now, I know that we've kind of almost doubled our database, in the last year. So, we've got people, and we're making calls, and, we're making some connections with people, and, we're getting kind of off the back, or we're getting, yes, this person is somebody that I want to connect with. What is it that you look for, and how do you process now those relationships so that you're securing the right people that you want to put in a GP or even an LP situation?
Securing those right, relationships is communication. It comes down to communicating and setting expectations up front, especially with partners on the GP side. Setting those expectations up front and communicating with them so we're all on the same page, and making sure it's in writing helps tremendously, and I highly recommend doing that. When it comes to the LP side, as an LP investor, it goes back to communication as well. They're going to want to know that you're communicating with them, that they feel comfortable in investing alongside of you. And I think, having a great system in place to make sure you're communicating good and bad to them helps tremendously.
So then question, you mentioned in writing, are you advocate for NDAs? Because some people say, I don't sign NDAs. When you're trying to talk about, a particular relationship or a deal or having some things written out, or are you specifically talking about relying on the purchase sale agreement, the PSA, in order to ink the relationship between the general partners? So how you said get it in writing. What do you mean by that?
Well, get it in a contract form. You don't need it as an NDA. If I'm presenting a deal, like I have some family offices we have relationships with, and if I'm presenting a deal to those family offices, I have them sign an NDA so they don't go behind me to try to get that deal. And they're okay with that because I've already built a relationship with them, and they know that I'm going to be sending it to them, and that's how it's going to be. When it comes to like a partnership, I think all partnerships needs to have agreements between each other, knowing, you know, what their guidelines are, what their duties are, what we expect of each other.
So is that in the PSA for you? You know, the purchase.
No, definitely not the PSA. The PSA
I'm just throwing it out there.
Oh, no, I know.
Yeah.
PSA is just between the seller and us. The partnership, for example, if you and I decided to partner on a deal, I want a contract between you and I. I want to make sure that you're holding up your end of the bargain, and same as myself. And we have something to rely on, that if you decide to maybe get married to someone who's a terrible person, and you get a divorce, and now that your ex-wife comes to me and says, well, now I own half of this. I'm like, well, who are you? You know,
Exactly.
No, you don't.
Right.
You're not taking control. You're not trying to manage it. Or, you know, what happens if you die?
Right.
We need an agreement between us, specifically saying if you pass away, or, you know, if something happens, if you get addicted to alcohol, you know, I need to take full control, you know, and so those are very important between JV partners, GPs, that you all have a GP agreement, JV agreement, operating agreement just within that one entity of all the GPs. So we all know your roles, your titles, what you expect from each other, and how things are going to operate.
Got it. And so that's inked at the time that you guys decide you're going after that particular property, or are you doing something before then? Because say you have an LLC, I have an LLC, should we do a partnership now, you know, partnership agreement now, or is it, do we wait for a particular deal before we're inking that? Just timing is where I'm at.
I would say, you know, I would do it on a deal by deal specifics, because in that JV agreement, you would specify that property. Because, you know, you may not want to do JV partnerships with that person for the rest of your life, you know? So I would wait to really, you have that deal by deal, and on that deal, then you go ahead and say, look, here's a JV agreement between us on this particular deal.
Got it. So I know that, are there any new trends that you're seeing? Because I know that some people are talking about some of the newer trends that they're seeing in multifamily. Are you specifically strictly BC, or are you looking at A properties, or?
We look at B and A. We don't look at C. We used to, we don't anymore. My opinion, the demographic of employers are very strong during that 1990 and 2017. That those type of employers employ individuals that like to live in those type of or like to live in those type of properties, and those type of properties are going to be extremely stronger during this COVID. And who knows, there's another $1.9 trillion stimulus bill that's supposed to be passed any day now, or any week now, and that has an eviction memorandum into September of 2021. Those are very important. Yeah, that's very important.
Was extended that. I knew that it was extended at least another month or so for
towards the end of the month.
Yeah,
it's extended, but it's supposed to be till September. What happens if it's September? Those C properties may take a pretty big hit.
Well, there's also a lot of provision. So this is very interesting, because I was having another conversation with another operator, because I think there are two sets of people that are saying, hey, the sky is falling, right? And then the other ones are saying, no, we're collecting rents at 90%. You know, everything is right with the world. But the question is, where is that money coming from, you know, where you're actually collecting? And I think some of that is a part of the stimulus bill as well, because there'll be extra money given for people who are in unemployment. And then there is money also given to nonprofit organizations, if I'm not mistaken, that also provide rent assistance or even mortgage assistance for those who own houses. And so with that, people are able to get additional money to be able to pay the rents and everything.
If they're willing to.
They're willing
to.
Well,
a lot of people aren't willing to. A lot of people aren't willing to take those steps. That's why we've been proactive with our property managers to help them and guide them and say, look, this is what you need for this nonprofit or this grant. Here's the link. All you have to do is fill it out. You know, and we try to stay on top of it.
So how are you communicating that? Now, we were talking about putting it in a newsletter of sorts. Are you doing that? You're putting it in a newsletter, or how are you?
No, physical letters at their front door.
Oh, okay. And then just say, if you need help, here are the people, here's the places you can go. get this together and make it happen.
Oh, for sure.
Right. So
Because this stimulus bill and all that next $1,400, we don't know if they're going to use that to pay rent. We hope they do. But
right.
what a lot of these tenants don't know, a lot of these tenants don't know is that even if they stop paying rent, they think they're covered by this memorandum.
Mm-hmm.
It's going to hurt their credit score, and it's going to get turned over to collections. It's always going to be on their credit score. They're always going to have to owe that money. And what's going to happen is that they're not going to be able to rent anywhere else after this COVID stuff calms down.
So better to try to find or get connected to.
Heck yeah. Try to find grants, try to find resources out there for your tenants to pay you, because I make sure our property managers know and tell our tenants, hey, if you don't pay, we understand we're all hurting in our own ways, but if you don't pay, it's going to get turned over to collections. Your credit score will get hurt, and you're not going to be able to rent anywhere else.
Right. So in some places like Texas, I've heard they still move forward with evictions if, again, it happens to be a situation where there's an extended time where people are not paying. I understand that some people had that happen in terms of operators, and they were happy about that, and some people like that because, again, they can get people to pay. But again, I think I applaud you and your management there to at least try to help your tenants by making sure they have access to programs, or know that there are programs out there that they can use to get access to that.
And no one called COVID-19 on the phone and said, hey, I want you to come hit America right now. Yeah. So it was an unprecedented time frame for all of us. It was historic because I don't know anyone that has lived through a actual shutdown of an economy. Mm-hmm. I don't know anyone, except through COVID. So it was a very historical time frame, and we didn't want it to happen. No one wanted it to happen, but if you're not willing to take that extra step to apply for a grant or an assistance, that tells us that you really don't care about the property. You don't care about your other tenants. And we want to make sure the right people are in our properties for the right community. And if you're just going to sit there because we're still having to pay our mortgage, no one's giving us assistance.
Gotcha.
And so we want to make sure that everyone's treated fairly.
Well, there were some operators that were going and using the forbearance, right? You guys take that on, or?
If from what my understanding in the state of North Carolina, when that first rolled out, if you have a government-backed loan, you're not allowed to.
Oh, you're not allowed to do forbearance?
No, from my understanding, from what our property manager told me on one of our properties.
Okay.
And that's what we did not do a forbearance.
Got it. So then your collections, are you in the 90s?
Our collections are high 80s.
High 80s. Okay.
High 80s. Yeah. And if someone has, and we're analyzing a property too right now, and the broker and the seller is saying they're at 100% collections. That's a lie. I don't believe that.
Yeah,
even pre-COVID, you're not at 100% collection.
No. I mean,
so with some of these people saying they're at 90s, I would still second guess them. I would want to see it on paper and to actually see, okay, you're operating at over 90% collection rate. Because it's just so hard for me to believe. Every operator I talk to, they're high 70s, they're in their 80s on collections.
Really? Okay.
Yeah.
Now I know that I've talked to some where they're in the high 70s, 80s, maybe the first of the month, but they get into the 90s by the end of the month because there's certain.
That could be, people are on payment plans and things like that. I can understand that. But I mean, I see it all over social media. 100% collections. I doubt that.
Got it.
No way.
So you're very conservative in your estimation.
You need to be. You need to be.
So then you're not going to be in the C-class properties because that represents kind of a softening, and right now economically it doesn't work. Were you ever in C before, or were you always?
We were. I just strongly feel, and through the shift in our business, wanting to go to a more institutionalized type of asset. That institutions are going to look when we decide to sell between 1990s and 2017 at the moment.
So you are looking to get institutional backing, or just to only sell to institutional?
Both.
Okay. Got it. That makes sense. So have you thought about, kind of doing your own institution, as it were, in terms of getting HUD financing? So you do your Fannie Freddie and then you wait for a year and then get that 40-year loan through HUD. Is that not a strategy also?
We've thought about all options, and one thing I love about my team is that they know I'm an options type of person. So if you bring me an issue, give me 5 options to solve it. And let's think of options and ways to accomplish it as a team. So we've seen all different type of scenarios. Right now, our main goal is building deeper relationships with institution and family offices, and hopefully converting them into a fund.
Got it. Well, listen, man, thank you so much for taking.
For sure.
This last segment is giving us the boot, letting us know what tip or what piece of advice you would give to our listeners, or to us, about what they should do next in the multifamily world.
Yeah, so I always say this number one thing is sit down with yourself and figure out what you want to do, figure out your goals. And once you figure out who you are, what you want to do, then now you can go ahead and figure out what you need to do to reach your goals and to set goals. So I always say that first, number one being priority. After doing that, if you want to be an owner operator and you're a newbie, find an owner operator in your city and ask if you can just shadow them. Don't be a pain in their rear end. Ask if you can shadow them and get an idea of what they're doing. And then at the very end, take them out to dinner and ask questions. That's what I did when I first got in the business, to gain all the knowledge very quickly, to get to where and to push to where the company's at currently. So
that's even a good one also, because more than likely you won't be able to get a Fannie Freddie loan yourself. So a season.
Correct. And Freddie does not play around. Fannie's a lot nicer. Freddie, they're the big bully on the block.
Got it. Now, how do people get in contact with you? They want to reach out to you. They want to partner with you. How do they get in contact with you?
Yeah, you can reach me directly at chris@qccapitalgroup.com. We also do have a closed Facebook group, which is the Mindful Multifamily Network. Feel free to jump in there. Anyone who I interview on our podcast, which is the Mindful Multifamily Show, they're a member of that network, so you can network alongside them. Other guest people, I think we're pushing 1,300 people and counting very quickly. So go ahead and hop in on that group where you can go ahead and grow your knowledge about multifamily investing.
Perfect. Well, listen, Chris, thank you again for taking time.
Yes, thank you so much for having me.
Absolutely. And if there's anything that we can do for you, please let us know.
Will do. Take care.